Welcome back, YouTube, to a late night video on SOFI. I really want to just go over the numbers. I don't get involved in the emotional story. My job on this channel is to figure out the numbers and intrinsic value and get close to a fair market value while putting a rate of return that I'm personally looking to receive. So with that being said, let's talk about what happened with SOFI. When we came into the day, SOFI reported earnings and it was a beat, and there was definitely some strong numbers that SOFI was reporting. As we can see here, the stock hit $6.52, skyrocketing on the news and then selling off throughout the day, going down 12.2%. Now this left a lot of investors confused, probably asking what is going on here. But first and foremost, I've had a 1-year target on SOFI right around $5. In order for me to gain a rate of return that I'm looking for in a company like SOFI, I need to be buying it right around the $5 marks, preferably a little below, in order to get a rate of return that I'm looking for of a fair market value between a $13 to $15 stock over the next 7 years. Now, this is just me running my numbers. You guys have to do your own due diligence. But this is also how I've got a price target on a company like Palantir around $6 to $7 when most people were recommending it at $25 and $30. So make sure you don't fall too much in love with the story. There are some great companies out there that have phenomenal stories. That doesn't necessarily make them a successful business. And just because there's some great assets within a company doesn't mean that those assets are going to perform in time for the company to be profitable and make it through hard economic times. So just keep that in mind when you're investing. And if you missed my last video on JP Morgan scooping up FRC, you might want to look at that video before watching any further, because that video is going to explain diversification in a bank and why you want to own specific banks. Now, first thing I want to point out here is the phenomenal growth on all the platforms on SOFI, and they do have a tremendous amount of offerings. One area I really want to see them focus on, guys, is going to be financial services. This is a compounder aspect of the business, and it is a low risk passive income when it comes to a bank. They make money off of new money coming in and money growing, so that is helpful. Where we get a little bit nervous with SOFI is going to be the lending. A lot of their business is reliant on loans. We're going to get into that in a second here, but it's personal loans and student loans is really where their bread and butter is. What is the problem with this? There is no asset backed on this loan, meaning if they had a home loan and somebody stopped paying, yes, there was a pain in the butt foreclosure process, but there is a physical and tangible asset involved. With no real asset involved, and we're talking about student loans and personal loans, people can be irresponsible, and this can definitely hurt a bank, especially when the majority of their income is based on this. We're going into a hard economic time here, and the road out of this hard economic time is really unclear right now. We obviously know banks are going under, and when a bank reports, even though it's reporting a loss. So yes, the top line revenue growth without question is extremely impressive. But even doing $472 million in revenue, the company still lost 5 cents a share. So let's talk about loans. They grew personal loans by 46% to $2.9 billion of personal loans. Now, this company has a market cap of $5 billion. This is a substantial weight of the company. Is personal loans, student loans making up the majority of the business that SOFI does? Well, isn't this good that they're growing 46%? The answer is yes, it is good. But you want to be well diversified in hard economic times. As I stated before in my last video, you definitely want assets under management. You want home loans, you want business loans, and it's always better to have some sort of collateral with a loan. Now, there is a chance that SOFI would have broke even on the quarter or possibly had a positive quarter if the student moratorium was lifted. As we know, that is not the case, and therefore we still have to deal with the times that we're in, and this will be a boost in their earnings going forward, in my opinion, as long as the government doesn't throw any more wrenches in the way. So let's start with red flag number one. Red flag number one is going to be where they're making the majority of their money. That's going to be personal loans and student loans. Number two red flag is that they're still not profitable and we have banks going under. Now, personally, I don't necessarily think this is an awful thing. Yes, they are heading in the right direction, but we have to think about what the investor sentiment is right now. We're watching banks go under left and right and sell off pretty drastically here. So for a bank to do over $400 million in revenue, and still not be profitable is probably scaring the investor somewhat here. The other thing we have to take into consideration is SoFi overall is a fairly small market cap and is heavily shorted, therefore it is manipulated to a sense. The other thing I want to talk about here is dilution here. Over a 1-year period, you nearly have 70 million shares that were put on the market, which means that this is watering down you as an investor. Are they going to have to dump more shares? When is this finally going to slow down? When are they going to be profitable? When is their business going to be a little bit more diversified and not so reliant on loans that really have no assets that are backed? So these are some question marks I have as an investor. Yes, I understand all the technology the company has. Yes, I understand the growth, but at the same time, I understand the risk at which they're growing this business at. And the other thing I do like is that they do have a tremendous amount of cash on their balance sheet. So while there is a lot of dilution, while I'm not a huge fan of how they're diversifying their overall business, I do think that they have plenty of cash and they are heading in the right direction. So I think overall they're okay. Wouldn't be too excited. I want to see them grow other aspects of their business. If they're able to grow the technology platform out a little bit stronger and really focus on financial services and building out a platform that is pretty unique compared to maybe a Schwab or E-Trade, I tend to think it'll demand a higher multiple, and therefore I can get behind paying a higher price for the company. And I do think they do have the opportunity to do this. Overall, I think they are heading in the right direction, but there are red flags as well, ladies and gentlemen. So let's not just, when we're looking at an investment, we have to keep an open mind here. Yes, we can fall in love with some stories, but as we all know, there are a lot of stories out there that do fail. What matters in the end is going to be the intrinsic value of the company and what the future free cash flow of the company is going to be. And as we see here, they are not producing free cash flow. They are not even profitable. Are they on the cusp of profitability? Absolutely. Once again, I definitely think where we can get behind a higher multiple and a bigger growth opportunity is going to be underneath financial services and growing the tech platform out, which then really makes them a true fintech company, and it should also expand margins. As always, this was just a quick dive into SoFi. Hopefully everybody enjoyed that, and we will see you in the next one. Peace.